Hello and welcome to this edition of Biztalk on China's evolving economic landscape and its implications for foreign investment. I'm Guanxin in Beijing. Well, China's economy has undergone significant transformations over the past few years and reshaped the global economic environment. With ongoing reforms aimed at enhancing market efficiency, reducing regulatory barriers, and fostering a more transparent business climate, China demonstrates a firm commitment to opening up. Understanding China's investment landscape is more crucial than ever for multinational corporations and investors worldwide. And today we're joined by an esteemed panel of experts who will share their insights on this critical topic. Sir Martin Sorrell, founder and executive chairman of S4 Capital, welcome to the show. Mr. Denis Depoux, global managing director of Roland Berger. Great to have you with us. And Mr. Saravoot Yoovidhya, Vice President of Thai Chamber of Commerce in China, and also the Chief Executive Officer of TCP Group in Thailand. Well, thank you so much for being here. So, Sir Martin, given your extensive experience in global marketing and communications, how do you view the current state of China's macroeconomic environment? And what are the key considerations for foreign business when investing in China?
There are really twin tracks with the biggest force in the world economy, the US. I mean, US is what, about 28 trillion in terms of GDP. China about 18, and the world is about 105, 106. So those two economies dominate the world's economy. We'll have to see what happens. There's some way to go till the election. But given that, that's a rather uncertain climate politically on that track. Economically, both countries, both the US and China, need one another. If Trump is re-elected, he will impose even greater tariffs, and that will be a headwind for global trade. So it's an uncertain environment at the minute.
But Sir Martin, the IMF expects China's economy to grow 5% this year, which is much better than US, Europe, and other. For foreign companies, do you think China still be an important market for them?
If you have a position, you take a Unilever or a Reckitt Benckiser who have 7 or 9% of their sales in China, they probably want to target something more in the 10 to 15 to 20% range, and therefore they do want to expand their business there. But these political uncertainties are really causing a lot of difficulty. I mean, if you look around the world, North and South America offer growth opportunities, the Middle East does, and so does Asia. But in planning their investment and growth in Asia and Europe, where a lot of our clients look at Europe not as revenue opportunities, but cost opportunities. So technology and efficiency and cost reduction become the priority. But if you look at Asia, clients it's not just China that they're looking at India. Chinese multinationals and Chinese domestic companies still very strong and very aggressive in terms of expansion, not just in the domestic market, but internationally too.
So the key word is uncertainty. And let me take this to you, Mr. Depoux, as the Global Managing Director of Roland Berger. What is your assessment of China's macro stability and growth prospects? And how do you advise foreign clients to navigate the evolving economic landscape?
If you look at this volatile but still centered around policy target growth of 5%, this is still a lot much more than other regions of the world. I mean, North America is around 2-3% for the coming years. EU is around, let's say, 1 to 2 or maybe 0 to 2. Southeast Asia is quite dynamic, but still at 5-6%. India as well. At 5, I mean, this is right. This is not so bad. So the fundamentals of the Chinese economy are still pretty strong. And it's supported by its industrial clusters. So it's really what has been built over the last, let's say, 2 or 3 decades that still fuels the Chinese economy. And if you look at GDP growth, now I think 75% of the growth is fueled by the domestic economy. There is a lot of savings that could be unleashed in China. There is potentially a lot of disposable income that could go into consumption. And what it will take for this to be unleashed is not a stimulus plan, is not a big game. It's gradual transformation of the Chinese economy. And that's what I see. That's really what I see ongoing with industrial modernization, with the dash for more productivity, added value, because that will create higher wages ultimately and unleash a bit of the, or increase the disposable income and unleash some of the consumption. It's also shifting some of the exports to the global south. That's very striking. Generally, the global north is now only 59% of Chinese exports. It's down from 80 at the beginning of the let's say of the opening. So when China joined WTO, and the global south, on the other hand, went from 20 or 21% to 41%, and that will continue. And if you look at the in the last 2 years, if you look at the growth of Chinese exports, it's double digits towards most of the global south, also Middle East, Mexico, Russia. So ASEAN has become the #1 trade partner of China. So there is a big change in the Chinese economy itself, modernizing, creating more added value, but that will take time. And there is also a shift towards reducing the dependency on exports to the global north or to OECD country. And for foreign business, what that means is that they need to transform as well. I think generally China is existential for a lot of foreign businesses, either as a supply chain component, as a global supply chain component, or as an outlet, as a market for product. A lot of transformation is needed to face that competition, to leverage that dash for added value and that innovation in the Chinese market. So still very strong perspectives, but I think quite some effort needed to adapt to the new game.
Based on the integration of regional economies, the trade between China and Thailand have been very strong lately. And so, Mr. Yoovidhya, from the perspective of Thai businesses, how do you view the current state of China's macroeconomic environment, and what opportunities and challenges do Thai enterprises face when investing in China?
The Chinese government has resolutely deepened reform and opening up, and the Chinese economy has made remarkable achievements. The third plenum is a crucial event that brings significant policy directions and reform measures. China stands as the world's second largest economy, playing a crucial role as a stabilizer and a powerhouse of global economic expansion. With its high-quality development featured by technology and innovation, China now serves not only as the world factory, but also as a global market and R&D hub. China economy sees more vitality with the development of the new quality productive forces, empowering global economy, and in the meantime, offering more opportunities for foreign enterprises to develop in China. As Thai business representative, TCP is particularly attentive to the following aspects. First, on economic policy adjustment. We are very interested in measures of further opening up trade and investment facilitations. These adjustments could provide more opportunities for Thai businesses to enter and operate in China. Second would be on intellectual property protection. On the third would be on promotion of domestic consumption. China's efforts to boost domestic consumption are really crucial. We believe that with the right policies, we can help foster a vibrant market that benefits both consumers and businesses alike. China opening up drives regional development. The continuous deepening of friendly cooperation between China and Thailand will encourage more two-way investment. In recent years, under significant initiatives such as the China-ASEAN Free Trade Area, the RCEP, and the Belt and Road Initiative, China and Thailand have increasingly strengthened the cooperation. Thailand is a key partner in the BRI and also a member of RCEP. The various policy advantages under the umbrella of the China Trade Community with a shared futures has broadened the horizon for Sino-Thai cooperation. And China consistently ranking as Thailand's largest trading partner for 11 consecutive years, and also being the most important source of foreign investment into Thailand. In March this year, China and Thailand enter a visa-free era, further boosting the bilateral business communities and exchanges, as well as tourism. Next year, China and Thailand will celebrate the 50th anniversary of the establishment of diplomatic relations, bringing a new starting point for the development of bilateral relations. As the Vice President of Thai Chamber of Commerce in China, I firmly believe that the deepening economic trade ties and culture exchanges between China and Thailand will inspire more and more Thai enterprises to start businesses in China. In fact, China still stays as the top priority to entrepreneurs in Thailand. Taking ourselves as an example, TCP Group sees China as one of the most significant overseas investment markets. Actually, we started our business in China back in 1993 through setting up the first Red Bull factories in Hainan. And just for the past 2 years, TCP Group has made a total investment of about 3.3 billion renminbi in China to build 2 new Red Bull factories in Sichuan and Guangxi. And moving forward, I think that we will steadfastly carrying out our long-term investment plan in China.
Indeed, and developing Asia as a whole has become increasing the contributor to global growth. So, Sir Martin, let me take this to you. There has been increasing concern about the world turning into different blocks, and particularly in the realm of technology and innovation. You know, China has made great strides, but the United States trying to contain its development. How do you view the competition going forward? There are still opportunities for Western companies to cooperate with Chinese on the technology development?
Well, it is becoming increasingly difficult. I'll pick up a point that Denis made about the global North and the global South. And I think we underestimate the depth and strength of opinion of the global South in relation to the hegemony of the global North, that the US and Western Europe in particular, the hegemony it had. And I'm very struck by what Denis said, because I was looking at a map. It was on the Semaphore website a few weeks ago, and it was a map of South America, and it colored in each country. It's the major trading partner of each country. And it colored red for China, and it was all red, except for Argentina, whose biggest trading partner was Brazil. Now, the one country that since that map was produced that has changed is Mexico, where America has become its largest trading partner. But apart from Mexico and apart from Argentina, all of the other countries, the biggest trading partner was China. And I think what that is, that's an example of what Denis was saying, that we are seeing a very great shift. Another way of putting that is that the G7, or if you take the E7, the so-called emerging markets. Now, these markets have emerged like China, like India. But if you take the E7, their total GDP currently is bigger than the G7. And if you eliminate China and the US from the E7 and G7, make it an E6 versus the G6, the E6 is bigger in terms of GDP. So we are seeing a major shift in the patterns of trade, as Denis have pointed out, and that is going to influence the thinking of our clients. So I think it is going to be, the world is a very different world. I'm now 79 years old, and I over the last 40 or 50 years, we've had a golden age of relatively high growth, relatively low inflation, and consequently relatively low interest rates. I think we are going into a world or into a period of lower growth. It will still be decent growth, 2 or 3% worldwide, but it will be lower than it was before. Inflation, I think, will be stickier. The attempts by the Fed and others to bring down the inflation rate to the target rate of 2% have taken longer. I mean, at the beginning of this year, we thought interest rates would come down faster. They haven't come down as fast as people would like. And there's still some question mark as to when the Fed will lower interest rates, whether it'll be September, whether it'll be December, whether it'll be before or after the US election. Then Asia, as I said, remains strong. 3 of the top 5 economies by 2050 will be Asian: China, India, and Indonesia. So it will be the most powerful economic bloc in the world by 2050. A population, by the way, is another important point. These are long-term population trends that are going to have a big impact as well. But the basic point, and therefore Asia is front and center on the multinational agenda, but in a much more tempered and varied approach. The other thing that foreign multinationals are really focused on is the growth of AI and the growth of technologies such as the metaverse, quantum computing, and the cloud. And all these changes in technology will have an impact on all markets, but particularly on Europe. I mentioned before that many of our clients see Europe, if not all, see Europe as a cost opportunity rather than a revenue opportunity. So increasing the efficiency of your organization through AI, through blockchain, through the metaverse, through quantum computing is going to have a huge impact. So net, I think there are 2 things that our clients have to focus on in this new world. Not a deglobalized world, but a world where globalization, I think, is less the emphasis, and fragmentation of geographical expansion is more important. 2 things: pick your markets really carefully. So a more varied, fragmented geographical approach. And then the second thing, in a world that is growing more slowly, where inflation is higher than people anticipate, and therefore interest rates have been higher than we're used to, taking efficiency, improving efficiency in the world, particularly with the AI technologies that are being developed most effectively and efficiently in the United States and China. Those are the 2 major AI powers in the world. In that world, technological efficiency is going to become even more important, and improving the effectiveness of your organization is going to become critical. So those 2 things: fragmented geographical approach and improving efficiency.
Talking about efficiency, let me turn to you, Mr. Depoux. In your opinion, how should foreign companies value the most efficiency or security, in particular in the development of technology and in the 5G digital economy and artificial intelligence? How should multinational companies leverage the advancements in the China market, and how should balance? How do they consider the risks?
As you said, China is ahead in many technology. We see it very visibly in the telco, in the digital, in the e-commerce environment, now in the batteries, in the electric value chain, or generally in the energy transition already for decades with solar PV or wind turbines. But that's true pretty much across multiple industries. We see it from our clients in the chemical industry, in the new materials industry, in the biotech industry. So, and I could go on and probably cover most of the economy, looking at Chinese companies that are on par in quite a lot of cases, and in some cases even above their traditional Western competitors. So what does that mean for foreign companies? Well, they need to leverage this technology advancements, this innovation in China, probably invest even more in China, maybe not only to serve the local market, maybe not only to serve the global supply chain, but simply to be there and part of the game. If you're not in the Chinese EV market, well, you're not part of the global EV market. If you're not in the Chinese battery market, you don't play a role. If you're not in the Chinese AI ecosystem, you probably don't play a role going forward in AI, because this is simply where it's happening. As you said, maybe some companies will pick their market. Maybe some companies will still try to remain global because that's good for them. That's good for their productivity. That's good for their innovation, and that's good for their shareholders, which is also an important concern for many companies. So that's what we start to see, and we really see in the foreign businesses in China two types of companies: those who see this coming and are starting to adapt to the Chinese local competition on the one hand, and to that complex, globalized, and geopolitically tense world. And those companies that still think that they can rely on the old driver of growth in China. And needless to say, the first category will be resilient and thrive, while the second category will probably be erased from the market soon.
Indeed, it's an ever-complex global environment, but the risk of missing out on the engaging with China is also cannot go unnoticed. And let me turn to Mr. Yoovidhya. Innovation has become a central strategy for China to drive future growth. So from the perspective of Thai businesses, how do you view the current state of China's economy and innovation, and what areas do you see opportunities of cooperation?
We can clearly see that China's economy is increasingly focused on quality through innovation, driving rapid advancements in its technological capabilities. This shift towards new quality productive forces is boosting China's innovation capacity, providing continuous momentum for the global market, and also presenting new growth opportunities for foreign enterprises. At TCP Group, on the research and development front, we have established an R&D center in China, utilizing artificial intelligence and big data technologies to accurately capture consumer insights. This allows us to develop innovative products tailored to the needs of Chinese consumers. Additionally, we also aim to leverage China's innovative environment and TCP Group's global marketing network to introduce innovative products from the Chinese market to other markets. I truly believe that the continuous development of China's technological and innovation capacity does offer numerous opportunities for closer cooperation. As for Thai businesses and other foreign enterprises, collaborating with Chinese companies in areas such as technological research, product development, and market expansion can lead to mutual benefits.
Indeed, a lot of opportunity to explore in the technology and innovation areas. And Sir Martin, let me turn to you because China is firmly committed to high-level opening up of its economy and advocate for free trade and globalization. Tesla has also upped its game in China, especially in the automation sector. At the same time, the United States is introducing more tariffs. How do you see China's role in the global economy going forward with these policies and U.S. policies, and how do you see the implications for foreign investors?
We've had 60, 70 years of peaceful coexistence and development. Globalization, I remember, when I was just almost starting my career in the advertising business in the 1980s, a famous article by a Harvard Business School professor, Ted Levitt, in 1983, where he talked about globalization and how consumers would consume everything in the same way everywhere. Now, at one interesting point is technology is enabling you to market products. I mean, AI generated content at scale, which we're seeing being adopted by companies with very significant rapidity. So this is using AI technology to market to consumers on an individualized basis. That is a very good example of what the reaction to what is happening politically and geographically. But I think realistically, navigating these very, very difficult political cross currents is going to be difficult for companies, and they have to be extremely agile in the way that they deal with them. Agility is going to be the key corporate attribute for companies in the coming years.
And let me turn to Mr. Depoux. What is your view on China's opening up policy and the evolving business environment, particularly in terms of regulatory changes, market access, etc.?
So if you look at GDP growth so far this year in China, it's basically fueled by export at a level of 15%. That's actually half of what it was maybe 3-4 years ago, or even before the COVID crisis, where it went up probably to 30 to almost 40% in 2021, which was a record year. So in a way, China needs to find outlets for its product because its strength is to be the factory of the world. Chinese companies are a lot more agile than any other companies, in my opinion, and they've been adapting to this. So basically by making investments. So we've seen it already for 2 decades in the solar PV industry, for example, and we're now starting to see it in the battery industry. We're seeing it in the NEV industry, with Chinese companies investing directly or through capital, through funds, in companies in Europe, in the Middle East, in Mexico, in the absence of real good perspectives to invest directly in the US. And it's visible in the figures. So in 2023 alone, already we're seeing a surge in greenfield investment projects of Chinese companies, both state-owned and private companies. And it's very emblematic of a very good agility. So in only 1 year, basically already starting to change, let's say, the roadmap of globalization. And that will shape the trade. And then I think different nations can decide whether they want to welcome those investments that will come with technology, with R&D, with employment, by the way, a bit in the way China did with the West 20, 30 years ago by mandating equity caps, joint ventures, technology transfers. I think so-called developed nations have probably a window, which will not be there forever, to promote Chinese investments and the benefits of these Chinese investments, because anyway, it will happen. So it can happen with us, or it can happen without us, and those investments can be localized elsewhere. And I think so that's, I think, will shape globalization going forward. When it comes to the Chinese market, you were asking about the opening of the Chinese market. It's very interesting to see that the Chinese supply chain is becoming an Asian supply chain driven by Chinese companies, now followed by American and European companies that are willing, especially when they're big, as Sir Martin said, to de-risk a bit China and also to take advantage of a more integrated Asian economic space.
So let me take this to Mr. Yoovidhya. How do you see China's economic policies affecting its trade relationships and partnerships with Thailand and other Southeast Asian nations?
China's commitment to opening up has significantly enhanced its trade relationships and economic partnerships with Thailand and other ASEAN countries. By promoting high-level trade and investment liberalization, China has created a more conducive environment for bilateral and multilateral cooperation. Initiatives such as the Belt and Road Initiative and the RCEP really exemplify China's dedication to fostering regional integration and economic collaboration. China's open policies have expanded trade volumes and increased investment opportunities with Thailand and other ASEAN countries. For instance, the import volume of Thai agricultural products to China has been growing, while Chinese investment in Southeast Asia have also been on the rise, driving regional economic development. As a significant and successful initiative for China to further expand its opening up in the new era, the Belt and Road Initiative provides various countries, including ASEAN countries like Thailand, with more development opportunities.
Okay, thank you so much to all our three guests. We're really running out of time here, and we would love to talk more. But so that concludes this edition of Biztalk. Many thanks again to our distinguished guests, Sir Martin Sorrell, founder and executive chairman of S4 Capital, Mr. Denis Depoux, global managing director of Roland Berger, and Mr. Saravoot Yoovidhya, vice president of the Thai Chamber of Commerce in China and chief executive officer of TCP Group. So from advancements in technology and innovation to the changes in regulatory environment and market access, China presents a complex yet promising landscape for investment. And the discussions today highlighted the importance of stay tuned to these complicated geopolitical developments, but the potential for further collaboration across various sectors. And thank you for joining us, and we look forward to seeing you in the next episode of Biztalk. Bye for now.